Hello, I'm David Cassidy with the weekly market summary for the week ending Friday the 12th of June. As Marie Curie once said, I was taught that the way of progress was neither swift or easy, and that is also true for investing, as equity markets have reminded us that the path for global equities is never smooth or easy. As you can see from the accompanying table, global equity markets ended the week significantly lower due to fears that there will be a second wave of coronavirus cases. Now, unfortunately, as we've previously highlighted, although some US states such as Arizona and Oklahoma have seen an uptick in coronavirus cases, on a national level, cases continue to fall, albeit slowly. However, whether or not we are seeing a second wave of coronavirus infections, equity markets are now starting to price in the fact that we will. Equity markets often tend to overshoot on both the upside and the downside, and while the week may have brought back unpleasant memories from the February and March equity market volatility, we actually feel that the week's falls simply reflect the fact that the recent gains got a little overheated. As such, we certainly don't believe that the week's falls signify a new downward trend, and as a consequence, we don't currently see any reason to panic, as there has not been a fundamental shift downward. To us, this was evident because some of the week's biggest fallers were those stocks that have recently rallied strongly but are still very much exposed to the ongoing impact of the coronavirus lockdown restrictions, such as IAG, the owner of British Airways, EasyJet, Carnival Cruises and Intercontinental Hotels. The week's economic news was dominated by Wednesday, the 10th of June's Fed monetary policy meeting, where the Fed's chair, Jay Powell, filled us with confidence that the US central bank will continue to provide whatever stimulus is needed to support the economy until it recovers. Elsewhere, while UK GDP data grabbed Friday's headlines with a contraction of 20.4% in April, it actually didn't tell us anything we didn't already know. In other words, the economy has hit a brick wall. However, there was plenty of economic data during the week that encouragingly showed green shoots are starting to appear now that the coronavirus lockdown restrictions are starting to be lifted. For example, Friday's University of Michigan Consumer Sentiment Index showed that confidence improved for a second month to 78.9 from 72.3 in May, while its Expectations Index, which shows how consumers view prospects for their own financial position and that of the general economy over the longer term, jumped to 73.1 from 65.9, which provides us with comfort that consumption behaviour is unlikely to see any permanent damage from the coronavirus outbreak and rise in unemployment. Looking ahead to the coming week, from the UK, we have employment data, unemployment rate and weekly earnings, CPI inflation, retail sales and the Bank of England monetary policy meeting. From the US, we have retail sales, industrial production, housing starts and of course the weekly jobless claims. While from China, we have industrial production and retail sales data.